This is Bill Gross, the LA Probate expert, and this is our Tuesday real estate investing Zoom. We get together every Tuesday at 3 p.m. talk about all things real estate investment. Whether you want to get started, or you're a new investor looking for that first or second deal, or a wholesaler, or a bird dogger, or a real estate agent, or an investor looking for deals or have deals to pitch, or a vendor, love to have you come on and share, learn, work together, network. The goal is for all of us to make more income and to increase our wealth. So one of the processes we have is we invite on vendors, I think, that can help you with your business. Certainly when I met this man, I was really impressed with their approach to helping investors price deals and see if they make sense. I know when I went to Grant Cardone's real estate boot camp last year, he talked about how every single deal he did, he ran by his lender for feedback when he was offering on properties to get their expertise because they have a different set of eyes. And so I saw at the LA Real Estate Investment Club, now renamed the LA County Real Estate Investor Association, Lloyd Siegel's program, I saw this guy, Tim Sachs, both as a vendor and give a short talk about how he helps real estate investors. And I thought it'd be great to bring him onto our call today. So Tim, thank you so much for joining us today.
Yeah, thank you, Bill. Nice to be here.
Just get a little background before we get started. Where'd you grow up, and then how'd you get into real estate?
Yeah, thank you. I grew up in Northern California in the Bay Area, and I went to Long Beach State, graduated from Long Beach State University, and then got a few jobs with one with Universal Electronics, and then I started my career at Deutsche Bank, and that lasted 16 years. And at Deutsche Bank, I worked in mortgage-backed securities and structured finance products, and as well as fund services. So we serviced and did the accounting for hedge funds and private equity and real estate funds. And when I ended my career at Deutsche Bank, it was to launch a fund here, and basically we were trying to bring some capital in an efficient form to an underserved market. And in essence, that's how we named our company. It's called Angulus Capital or Angulus Lending. And basically, I didn't know the word Angulus, and I just Googled it. I said, hey, what is the Latin word? Because Latin words can sound pretty cool sometimes and are catchy. What's a word for niche? And Angulus came up on Google. And so there you go. And that was in early 2015. And we've been lending on to fix and flip and bridge and probate since.
Wow. So angles probably come from that, like a niche or piece of the pie.
Yes.
Thing. Yeah, very nice.
Yeah.
Okay, a little Latin education for all of us. I think it's really important. I know we used to in America learn Latin because the root of all the words come from there, but we don't do that anymore. And we got some shout out for Cal State Long Beach. The Long Beach is the 49ers.
Yes.
Yeah. So definitely some Long Beach 49ers on the call. So very nice.
All right.
So not beach as opposed to Long Beach. Okay, got it.
We say go beach.
Go beach. No, I got that. I understand. I didn't know that. I'm a lifetime Los Angelino. I grew up in the OC, so I know beaches down there. But I spent some time in Long Beach and learned a little bit. Long Beach is like a whole separate world. You live in LA, you don't realize how big Long Beach is. What a big city, and how it's like there's a whole world. They're very self-contained in Long Beach, so people love right down there.
That's
so let's
true.
talk about what you do on a day-to-day basis. You offer lending, and I know on your website you offer a couple different products. So why don't you just kind of share with us, kind of one by one, what are the different products you're offering, and kind of give for newer investors kind of a background on what the products are.
Great. Yeah. So our bread and butter has always been bridge loans, and so bridge loans can encompass not only probate loans, which is a great opportunity, but also for those that are fix and flipping or purchasing to rent. And let's say you want to buy a home and you want to just do a lipstick job and then get it rented quickly. We have a fantastic product for that. And some of the benefits of the bridge loans are there's no prepayment penalty. And really, if you want to keep the funds for 2 months and pay us back, that's great. If you want to keep it for a year, if you have an extended project and you need 18 to 24 months, we can work on that too. So it's really a short-term loan that we provide to help others achieve their immediate goals in real estate, residential real estate.
So somebody buying a bridge loan, you mentioned probate, and that's the area that I deal with all the time. So share with me, are you talking about buying a property with court confirmation where you get maybe 10 to 30 days, you're buying it no contingency, no appraisal. So ahead of time, you look at the value and you'll establish some sort of a number And then what sort of a loan to value do you offer on those kind of products?
Yeah. It really, the loan to value depends upon the borrower's experience or the buyer's experience and what their FICO score is. And so the more deals that they have under their belt, the higher leverage. So let's say if you've done 6 deals in the last 24 months, then you are considered an expert flipper or expert real estate investor, and we'll go up to 90% of the purchase, as well as 100% of up to 100% of the renovation costs.
Holy smokes.
Yeah, and we have a product if you are this is your first property too. We want to work with you to try and achieve that, and so we'll go to 75%, and in the middle we can go 80 to 85 depending upon what your exit strategy is. So we have products all across the board, and ideally we don't want to do just one deal with the borrowers. I want to work with them and help them grow and achieve their goals, and let's do multiple deals together.
Right.
And so that's what we're about, is we like to establish relationships.
Wow. Still 9% is amazing for experienced flipper, because they're putting 10% cash at court. So 9% is financing almost the whole rest of it. And then they're going to have to do the rehab or flip the property out. That's a fantastic product. Okay.
Yeah.
So that is bridge loan, and then fix and flip. Kind of describe your product there, what you guys do there.
Great. Yeah. So the fix and flip is similar to a bridge loan. It's just got bolt-on financing for your construction work. And so essentially what we do is when we appraise the property, we appraise the as-is value, and we appraise the after repair value based upon a line item budget that you would provide us, just telling us exactly what you want to do and how much money you want to spend in each area. As well as, what's nice for appraisers to really help you get the value up on your appraisals is to write a 2-paragraph just text on what your vision is. So you can show them what your vision is and really hope to get them excited about that property and ultimately get the valuation up for you. So we'll do up to 100% of your renovation costs, provided that the after repair value is no more than 70% of the after repair value. The total loan amount is no more than 70% of the after repair value that's appraised.
Okay. So, and if you're putting 10% into it yourself and have a 20% margin, you're really covering all the rest. If you're 20% down, sounds like you're going to easily cover the amount of financing. Fantastic.
Yeah.
So talk a little bit then. Obviously, I know you guys do, a number of deals, but let's talk about, first off, for a brand new investor who's not sure what to do. So they're not going to get the maximum loan to value you offer. They're going to want to work towards that. But I know what really got my attention from you, I saw your booth at the trade show. I meet everybody I can, but I heard you speak and talk about how you offer to investors to let you run a deal and run the numbers ahead of time. And I thought that was really helpful, particularly for doing it at that venue where there's a lot of newer investors. And I think for new investors, that's a great service. Talk about that a little bit. What does that look like? I find a deal. I think it's a good deal. I'm not really sure. How do you help me get to that decision point?
Yeah, great. So Bill, what's funny is everyone hears the term win-win, right? That goes hand in hand with location in real estate. Every deal wants to be win-win. But how do you really understand if a potential deal is a winning situation? Not only for you as the buyer, but also for the investors, right? We want to make sure that we're working together and everybody's going to win, and there's a really solid chance that we're going to come out ahead. Everyone's going to come out ahead on this deal. And so with that mindset, what we do is we'll work with our borrowers and take in some of their input, and we'll try to add value for them. So I have, not only do we do a deal estimate on the costs of borrowing and how much we can advance, but we'll look at what all of the costs are for the improvements that they have planned. We'll look at what the property taxes are and what their holding costs are, and we'll put it into our model. And then we'll have a guess at what the after repair value is, or as completed value is. And that all goes into the model. And then we'll come up with a pro forma for you as the client or the purchaser, the borrower, to really look at and make a decision. And if the IRR is 20% or higher, then great, that there leaves some cushion. If it's really narrow, if it's 5% IRR, that deal may not be the right deal. Or you could look and see, maybe I don't need to go to the extent of the renovations that I originally had planned. Right. Maybe we just need to do some paint and quick touch up and sell this property quickly. So it really, this pro forma helps direct or guide our buyers where they want to go.
You know, if anybody who follows me on YouTube, I do a weekly market update. One thing I've really been hammering on is I think the real estate industry does not provide, the real estate industry news doesn't provide good education. And it really kind of emphasizes some mistakes. One is the value of improvements. You know, if I buy a property to rehab it, I'm basically paying a retail price. I got to hire a contractor. I'm buying one set of cabinets, one set of paint, one set of carpet, versus a company that does 5 of these a month. They're buying everything at a wholesale price, and it overestimates the value of putting money into a property. Also, the more money you put in a property, the more capital you have at risk, and the longer time it takes. So you put everything at risk. You really have to justify the work you do, I think, if you're going to spend that kind of money. And so it's funny, of all things you mentioned was scaling back on the renovations. And I see particular newer investors really overestimate the value that they add by doing work as if it's magic, that you spend $1 and increases the value of the property by $1.20. It doesn't work that way at all. That's just not, it's not commonly the case. And in the last year, everything went up in value. Everybody looks like a genius. So, hey, for those of you on the call, the goal of this is to be participative. When I set out to build this platform, I know that we in real estate, it can be a lonely business at times, that we need to connect more, connect with people, participate more, and get out there. We started this during COVID. I used to go to a regular meeting in person, and this was a substitute for that initially. Now it's still going strong. We've got 25 people on the call today and more probably coming in. But you want to participate, here's your chance. You have a guy who's an expert who finances real deals. This isn't somebody who's selling you some sort of package or coaching program or anything like that. He's here to help you if you have a deal to get it financed and close, make money. If it's not a good deal, to tell you it's not a good deal, the whole background. So here's your chance. So either raise your hand if you're so inclined, or put it in the chat box, or family style, unmute yourself and jump into the question. We'd love to make it participative. I could talk to him for hours. I will. If you guys don't cut me off, I'll talk to him for hours about stuff, because I don't often get a chance to talk to a professional about these kinds of things. So anybody want to jump in?
I got a question.
Go ahead. Who's that, William?
How you doing, Bill?
Just doing good, man. William Elkins, nice to hear from you.
Yeah, man. Trying to catch up to you, big dog.
You better run faster, man, because I'm not slowing down. I'm not stopping for sure. I report today. I got a 1.25 million purchase of probate quote today, so I'm not slowing down.
Rubbing it in. I love it. You keep me on my toes, if anything. Tim, I have a question. Great insight. What type of rates are we talking?
That's great. So it depends on your credit score and experience, right? So there's discounts if you have a lot of experience. And so we want to make sure you get taken care of for that. Right now, the rates are in the range of 7.375 for the lowest LTV, up to about 9 right now.
Okay.
And remember, this is a short-term loan, so the rates probably are less important, right?
Right.
And I would say you really want to focus on the big chunky fees, such as origination, where I see a lot of lenders charge 3 to 5 points, right? And so I'll tell you right out the gate, ours are much lower than that, typically in the 1.5 to 3 range. So right around there.
What's the repayment term again? How long do you have to repay the loan back?
So it depends on the project. So if it's a quick fix and flip, typically we'll go 12 months. If it's a larger deal, larger project, and you need more time, then we can go 18 to 24. So, but once again, that's another area where we can help advise on the project, right? So if for example, if I see someone that says, hey, we're buying a 1,500 square foot house and we're going to sink 150,000 into it, and I need a 24-month loan, I would ask, the first thing I would say is, why do you need so much time, right? And so and that just helps them figure out what their plan is so they can be profitable in the end. Because ideally, you want to get in and out of that loan in 5 to 6 months, right? I want to see you guys be successful.
Right.
I don't want to just keep clipping payments at an 8% or 9 or 10% rate, right? I'd rather see you guys do multiple deals.
Yes, sir.
I've only done one project. I'm not a fix and flipper. I do lipstick flips only. Just don't have the patience for buy multi-family that's right up already. But I did one project that we moved in from one house to another, and I said, we're going to repaint and surface the entire house. So all paint, all tile, all carpet redone. And the contract came back with quotes and it was gonna be like 3 months. I said, no, dude. I said, I'm giving you 2 weeks. And my wife was there every single day. We hit In-N-Out Burger. We were on them nonstop. I rode the guy like a horse. We got it done. It just taught me that, these things can drag out. They'll drag it out as long as you're willing to pay. Or, you gotta get done fast. And time is money. And when I owned a house, I wasn't gonna sit there and pay to be in a hotel or another house while they're doing, and while I'm paying guys to do the work. That just doesn't make sense. So you got to run that stuff as fast as you can. People get very lackadaisical with other people's money, but very big mistake. Okay, so William, to answer your question on rates and points, Winston, I know you also asked, did that cover kind of what you had or anything more specific on that? Let's see here.
Hey, William, I like that. Is that a truck?
No,
That's nice. I like that sunroof. Pretty cool.
Yeah, nice little Escalade for you, man.
Very nice.
Big needs any private car service needs, we're here for you. I'll put it in the chat.
when you're a big time agent like William, you got to drive an Escalade.
Now I gotta diversify, man. Everybody's not making the big bucks like Bill, man. I gotta have some other income coming in.
Okay.
But Tim, are you guys like pretty flexible if case you need a little more time to pay the loan back, worst case? Or are you guys coming for the property? Some of these hard money private lenders, there's no mercy, if you don't pay it off right at that time frame.
Yeah, that's a great question. It's funny. I was first consulting with a couple of family offices when I first launched this fund in 2015. So right before, and I met with a guy who's a manager of multifamily offices. And he said, Tim, the real money is when you can foreclose on the property.
Oh, damn.
Yeah. And I said, oh, wow. I mean, he's a shark, right? And that's predatory lending. And I'm looking at it from a different perspective is that we want to do multiple deals with people. The last thing I would ever want to do is see a property get foreclosed on. And so, yes, we are more than willing to work with you. We have extension options. We have different things like that. If, for example, if nothing's getting done and and the borrower isn't living up to their end of the bargain, then that's a different story. But if it's legitimate, then yeah, let's work together to get this deal done. With that, I just want to say, Angulus lending has never foreclosed on a property, period. Never. We've never had to do that. Wow. There was one property that we originated and eventually was sold off that did have to get foreclosed in our 7-year history. That was sold off it was foreclosed after multiple extensions. And we worked with the borrower to try and get it done. And unfortunately, it came to a foreclosure, but we've done 70, 80 deals in that time. So only
impressive.
One. Yeah, that's not our goal. Foreclose.
Thank you.
Yeah.
All right.
I have a question.
Yeah, Winston, you had a question also on rates. Did we cover that already, or?
Yeah. I'll mute myself. I'll let them speak and then I'll talk afterward.
Okay. Right, you're right. Go ahead.
Yeah, no, Tim actually covered it. I was just going to inquire about interest rate and points and all that in terms of, his cooperation level I thought was good with the other guy's question is, will they extend if the need for that and they can see cooperation? That's good. I've talked to some guys over the years that were sharks. Their model was loan to own, and they took great joy in foreclosing on people. So Tim seems to be one of the good guys.
Yeah. Well, I'll tell you, I'll be honest, Winston. When I look at a deal, the first thing I think about is, am I willing to own this property? That's from the perspective of, as a lender, I have to know that's something that we have to look at. But that's good for you too, or for anybody that's a borrower, because if I'm not willing to own the property and hand it off to somebody else that I know can get the project done, then it's probably not a good deal for anybody, right? Because the person that I would hand it off with has done 50 or 60 deals, right? And so I'm not going to be the one there swinging hammers, right? But I would get somebody that can get the job done, so it's good. I'll be honest with you. If, hey, we think this is a good deal or not, right? So.
Great. Thanks. Nick, I know you've been patient as well. Nick, how can we help you?
Yeah, my question is, does Tim do loans on properties that are income properties and you want to add on or build an ADU or in some way improve the property for additional rental value?
Mhm. Yes. Yeah, I love ADUs. Yeah, it's great with the law that has been implemented in California is fantastic, and it's good for the the real estate market. And so the only thing that we don't do right now is ground up construction, but I've been trying to work with some investors on a product for that for the future. But right now we definitely would do a project where you build an ADU, and I would like to provide the financing for that. Absolutely.
Nice. Lucas has his hand up. Lucas, how can we help you?
Yes, pleasure to meet you guys. I did have a question for Tim. I might have stepped in a little bit late. What kind of lending do you guys do? If you could just quickly summarize for me again.
Sure.
I'm mostly looking into, just a little back, I'm mostly looking into like Airbnbs throughout the state, so I wasn't really sure if,
That's another market I love, Airbnbs. The hardest part is finding the deals, right? That's the hardest part, and that's probably where that's definitely where Bill can help you over me, is finding those deals. But I have borrowers that are just capitalizing in the short-term rental market, and so look, there's a couple different options. You could go with the bridge loan, or if the house is turnkey already and you just want to buy it and get it rented out, then just go straight with what's called a DSCR loan or rental loan. And for those, I'm sure most of you guys know what DSCR means, but if you don't, I'll say it's debt service coverage ratio. And so basically it's a loan that looks at the cash flows or the projected cash flows and appraised cash flows for that rental property. And we base the loan off that appraisal for your rental loan. With short-term rentals, we use a little bit different inputs than a typical what's called a 1007 addendum that goes under appraisal. A 1007 addendum is for a long-term, such as a lease, that appraises what the lease rate would be, or the market rates for leasing for that area or for that property. But for a short-term rental, there's a company called airdna.co. And they provide reporting on a zip code specific basis on what the average rental rate is per night per that time of year. And so you could look at, say, Santa Monica on the beach, or you could look in Mammoth or wine country in Temecula, or Long Beach. We've done a few. So there's a lot of inputs. And basically the difference is if you want to go with the bridge loan, if you need to do a fix and flip, there's a little bit higher cost because you have to eventually either buy it out, sell it, or refinance. If you can go directly into a DSCR loan, then you can skip the bridge loan side and you don't have to pay those additional costs, right? And so ideally, just going straight to a DSCR is good. One thing to note about DSCR is that these are 30-year terms. We go seven-year adjustable rate, so 7-year fixed, and then it becomes adjustable and resets every 6 months after that. The thing is with that is it's got a 5-year prepayment penalty, and it's declining. So 5, 4, 3, 2, 1. We can go into that later, but so it's not something that you want to do if you may want to hold it for 1 or 2 years. So just something to think about. But there's multiple products that we can go into detail offline if needed.
So just to clarify for everybody listening, even regular loans look at the debt service coverage ratio. What Tim is describing is a loan that primarily or almost only looks at the debt service coverage ratio as the ability to finance a loan. Traditional banks look at that number and have a number on that, but then they also run other income numbers and personally have you qualified. So it's not just in the looks at debt service coverage ratio. He's suggesting that the property can qualify exclusively without the individual entity or borrower perhaps qualifying as well. Just to add a little flavor to your discussion.
Perfectly complemented what I said.
Yeah.
Perfectly done, Bill.
Because lenders will say, well, we'll lend on your property and then we run the DSCR, maybe disqualify your property. It's kind of how I look at it there, whereas using it as a way to qualify somebody. Ray, I know you've been real patient. Ray Fernandez Silva, how can we help you? What questions do you have for Tim?
Yes, I just
By
I
the
did
way, looking guapo as always, Mr.
Yeah.
Fernandez.
All right.
Very sharp.
I did not hear about the origination, the rates, and the extension, the cost. I know you mentioned that your company charges somewhere around the 1.5%. Is that correct? Did I hear that correctly?
For origination, yes. Yeah.
Okay. And then the rates range somewhere between 7 to 9.5. Is that correct?
So, yeah, it depends on what your FICO is and what the advance rate is. Yeah, I would say 7 to 10. So I would try and get you the best rate possible.
No problem. And you said depending on what? On the FICO, and what was the other thing? Advance?
Advance rate. So basically the LTV of the loan to value.
Okay. And the reason I'm asking this this question is because I never done a flip before. So this is going to be new for me. I was looking at what you look at, obviously, how many transactions or how many flips before you're done. So you be considered a seasoned, flipper or investor. So I will be considered new. I mean, obviously, I know I have a great credit. That's not a problem. So my thing is, that's what I was looking at the options. Would someone like me get a loan to do a flip? Because that's my question.
If I can just reset before you answer, Tim, if I can just reset the table, Ray. The reason why we have Tim today is because I saw him at a real estate conference where he talked about if you have a transaction, to send it to him and he'd run the numbers and evaluate based on your experience and the numbers of the property and such. So that's exactly what we have here. Most other lenders, they want to talk to you under contract. And even then, all the documents and your contingent time periods running. So Tim, go ahead and answer. How would he know if he's qualified to buy something?
If you're qualified to get a loan. So basically, I want to know that you can make the payments that are required. So we'll look at your liquidity. So we want to know that you have the liquidity to close the transaction, to actually purchase the loan, get the work done that you're talking about doing, and that you can make the payments and sustain the term of the loan, right? And so if you don't have the liquidity in your bank account to do it, what's your income look like? Are you earning enough to make the payments, right? So that's basically what it comes down to. If you don't have experience, that's okay. The first two loans, actually the first loan is a little bit higher, and then after you've done the first loan, we can start getting you into lower rates and so on. So
okay, so I'm sure you're going to be providing us with your information in some place where we can get more educated as to what is it that you do and how you can support us, correct?
Yeah, absolutely. So
perfect.
Yeah, we'll give all the contact info, but anguluscapital.com is a website, ANGULUS capital.com. And on the bottom, there's contact info, a phone number and an email. I'll repeat all that at the end and put it in the show notes. Okay.
Thank you, Mr. Everybody.
yeah. Thank you, Ray, for the question. Appreciate it.
Nick Cates, come back for seconds.
Yeah, actually, the last person kind of touched on it. I was interested in knowing what kind of documentation is typically needed and what is the time to close. How long does it take to actually close the loan?
Two excellent questions. Great questions. So the quick one is how quick is it to close? And usually I would say 3 weeks, 21 days. I got a nice quick story if you have a second. There's a house here in Orange County, and a borrower that I've done multiple deals with called me up and said, "Hey, come look at this house." So, and I was in the neighborhood, so I went over there and looked at it, and the listing agent was there, and the listing agent said, so she says, "How long do you guys need to close?" And I said, "When do you want to close by?" Right? And she said, "Can you close in 4 days?" I said, "I can close," I think it was a Monday or Tuesday. "Can you close by Friday?" I said, "Let's close on Thursday." Right? And so no, that's not always the case, but we can close as fast as 4 days. Right? And so a lot of it depends on how much the house is. Is it a multi-million-dollar house? Then we're going to need to get an extensive appraisal. Is it a house that's under 500,000? Then we can go with a shortcut appraisal. We can go with a broker's price opinion. There's other products that I can get done in 2 to 3 days and just get that deal done, right? And so it really depends, especially if we've done a deal with you before. In terms of the documentation, So every one of our loans in this market has a personal guarantee. So I just want everybody to understand that. And the personal guarantee just tells us that you guys are going to do what you say you're going to do, right? And so and it also allows you to establish an entity specific or a project specific entity to own that property, to cover your risks with any employees or anybody there. And so, but first and foremost, all these loans are recourse based. To me, that's no big deal, and it's never been a problem. But I just wanted you to know that. Then basically we have what's called a promissory note, and you have a deed of trust, and there's a few other documents, just disclosures. But it's nothing that much. You could do the signing in 5 minutes, so it's not too bad.
So do you need to submit, credit report, bank statements, paycheck stubs, all those things?
Yeah, that detail is great. Thanks for that, for clarifying. Bank statements, I'd like to see 2 months, the last 2 months. And basically, like I said, you just have to show us that you have the liquidity to close the transaction, right? And that you have the liquidity to make the payments. So that's that. I don't need to see payment stubs or anything like that. Your bank statements will speak for itself. The credit report, yes, absolutely, that's required. But that's fine. You just can't have any bankruptcies within the past 24 months. So, and the credit score, I like our credit scores to be 650 or higher. If it's below that, let's talk. Let's see if there's something we can do.
Lucas, got your hand up again?
Yeah, just a real quick question. If like I mentioned before, I'm trying to acquire some Airbnb properties. I don't have any investment properties as of today. I've owned a house which I've sold recently, but that's about the only real estate that I've owned in the past. Do I need, let's say, like a 2 year, 2 years worth of previous investment history in order to qualify for one of your loans? Or how does that go about?
Yeah, so it really depends on the type of product. So if it is a bridge loan, we have a product for someone without any experience, right? If you have experience and we haven't done any deals with you in the past, then I'll just look for a track record, and it's basically an Excel sheet with the names of the entities that own the property and the address and the dates that you've owned it and how much you invested into it, basically. So very simple, and I would provide you a template with that, and then we would verify ownership of that. But if not, it's okay. We still want to support you. It just basically, if you can show that you have a history, then we're going to get you more higher LTV, higher loan amount.
I see. And what is that? What's the highest LTV you guys can go up to?
90% right now for our most advanced. So I would figure if you've done, did you say that you had 1 deal or 2 deals done in the past?
I've owned my own house in the past, which we've recently sold. Now we're renting, but that's pretty much the extent of my, real estate investing experience. Essentially, I don't have any investment properties at the moment.
Okay.
I'm looking to, get into it essentially.
Yeah, we let's talk offline and
Okay.
certainly can see what we can do for you.
Sure.
There.
Sometimes, new investors look for, I admire what you try to do, Lucas. Sometimes new investors try to find ways to kind of shortcut the process. One of the reasons why the industry generally has a lower loan to value for new investors is to kind of hold you back a little bit, because, and I it's only a brand new investor who sends me a deal that makes no sense. They're trying to hold you back a little bit. But I would say to you, don't let the lack of money get in the way. If the most they'll go with you is 70% loan to value, there's people who will invest with you and create a partnership. And they also might bring the expertise that makes the lender want to raise the LTV a bit. And so what I always tell people is, don't let the money be the impediment. If you have a deal and there's really money to be made at it, the financing and the equity will take care of itself. You got to do the work. And if you don't know how to do that, see Tim, he'll help you with the financing. See me, I'll talk to you about the equity. Maybe I'll invest with you. Maybe more likely I have friends who want to go along with you if there's some rehab involved, because I just don't really enjoy that process. But I'll be glad to introduce you. I don't charge anything for that. I just put people together and try to make the deal work. So But don't let the lack of financing or equity ever stop you from a good deal. If there's a rate of return there, there's a way to finance it that makes sense. If you can't get a finance or equity, it probably means it's not a good deal. And that's where these deals fall apart, is people say, oh, it's a fantastic deal, but it's negative cash flow for 3 years and we have to put all this extra money in the deal and blah, blah, blah. And at the end, we have a profit margin of 5%. There's a clue, because any variation, and you're gonna have some cash flow problems that will risk the whole project. But don't let that get in the way, okay, Lucas? Great.
Bill, I have a quick story to share, just real quick. Is there's a bar I've worked with, and he came to me. He had zero experience, and he went and bought a house in Big Bear, and it's 680 square feet, right? And the cost, I think at the time, it was last July, it was $204,000. And so we did, if I recall, our loan amount was about $153,000. And so he had enough money to get that deal done. And then he got it quickly renovated and then rented. And then what we did is we refinanced that house into a Dscr loan in December this past year. Got him a ton of cash out because the price went up significantly. And then he recently purchased another house in Big Bear. And he's buying smaller houses. I think the next one was 700 square feet. And so he's working his way up. But if you don't have enough capital, you can always decrease the size of the project and work your way up that way. And then when you get a couple under your belt, you're going to qualify for more leverage anyways. So that's not a bad way to start.
But don't let a good deal slip by because you can't get financing. Don't ever.
Yes.
That makes sense. Keep calling people. Call me, text me, email me. Don't let the deal go by. I don't have to charge you for it. I'll charge my time. So, Melissa, one of our favorites here, asks about credit, non-credited, and raising capital. We didn't really talk about, Tim. You also, as an investor, for investors, take investment money capital. Is your fund currently open? And if it is, what kind of investors are you looking for, and what's that look like? And if not, what has it look like, and how could they get in line for next time?
Sure. So we're cautious about raising capital, and so the reason being is because we don't want to dilute returns for our existing investors. We look out and appreciate our existing investors. So when we raise capital is when deal flow increases, and then we have to raise capital so that our balance sheet is commensurate with the volume of loans that we're getting. And so we've definitely embarked on more marketing than we've done in the past. And so we're looking to grow our fund. And so at some point this year, I will be looking to raise capital. And so it's not immediate, but it may be later on in the year, maybe Q3. And the way that works is it's an 18-month initial hard lockup. So you invest with us for 18 months and you promise that you keep your capital in for 18 months. But in return, what we like to do is we offer a payback, a preferred return. It's called a preferred return. And basically we target 8% preferred return so that you can leverage those cash flows and use them. But let's say if you're retired and you want to live off 8% return, that's a good option for you. Or a lot of our investors just elect to keep the money invested and not take anything out, and then their balance just grows over time. And then after that first 18 months, then you're welcome to withdraw or redeem really any amount you'd like to with 3 months notice. So on a quarterly basis. And so we provide you quarterly reporting too. So
this is for accredited investors only.
Accredited investors only, correct.
And what's the typical minimum investment you look at?
Our published minimum is 250,000. I would entertain smaller amounts. I guess it just depends on the situation. And so that's if someone's really interested and they want to test the waters, I would entertain a smaller amount.
Great, good. So again, on the website under the fund, you have those details. Okay, good. Kirsten asks 4 days for conventional. No, this is not conventional financing. This is strictly professional investment grade products. We talk about bridge loans, fix and flips, and those type of products. We're not talking about a conventional 30-year fixed Fannie Mae type loan in 4 days. That's a whole different ballgame. And the truth is, I get all the time people who want to close that quickly. I literally was in court today. We're buying a property, and theoretically, we should have to close in 10 days. Well, the judge hasn't signed the order yet. He won't do that for 2 or 3 weeks. The escrow doesn't even issue the package for 7 days. So I said to the listing agent, well, you can't expect us to close the day after escrow issues the documents. We have to review them. There'll be some changes. So we got to work together on this. So, in practice, it's very hard to close faster than 10 or 15 days. I've done it. I've closed, I think, in 7 on a hard money loan. I wish I knew Tim. I think I would have got better terms on a great lipstick flip I made a lot of money on, but I made money on it, so I'm not complaining. Okay, good. Other questions, comments? I don't see any hands up. I don't see anybody waving their hand or in the chat box. And again, the more you participate, the more money you make, whether it be just put your camera on, sharing with people, encouraging them on the call, or asking for what you're looking for. And I think that's the other thing I always wonder when people are in these meetings, what is it you're selling? I'm a probate real estate expert. I always want to make sure people know that. I'll put that in the chat box. But some of you, I have no idea what you do. Are you looking for investments? Are you looking to find somebody to mentor you? Are you looking for somebody for opportunities to invest money in to get started? Here's your chance to share what you're looking for. You'll throughout the hook, put some bait on it, and that's that way you'll find it. Okay, there you go. Joel, I see your hand up. Joel, what's going on with you? Nice to see you. Shalom Aleichem.
Hey, nice to see you. It's been a while. I really miss all of you guys here. So I'm sorry I'm coming late and leaving early, but obviously I saw that I missed this call and I missed you guys. And really, I had the privilege to meet Bill a few weeks ago, and actually almost a few months ago, and we just really got connected. And I received so much value coming every time to this group. My background is in the real estate world. We probably should have met probably about 2005. This is when I started buying real estate, and when I started flipping homes, I probably flipped over 300 properties in my career. But today I have a network of real estate professions all over the country. And Tim, if it will be okay with you, if Bill will connect us to, I would love to connect with you one-on-one, if it's okay with you, Tim.
Of course.
And my network is all over the country. And really what we are doing today, myself and my team, we're teaching people in the real estate arena how to create a residual income on any transaction. And I love that the conversation today was a lot about flipping homes. As I share with you, I flipped over 300 properties. And let me share with you really what got this all together. I would spend hundreds of thousands of dollars in some cases on properties. I would buy the property. The property was distressed condition. Nobody made any money out of this property. Not the taxpayers, not the neighbors. That the place looked like. You know what it's looked like. What it's looked like when it's vacant. Not the cable company, not the electric company. Nobody made money out of this property. And I would buy the properties, fix the property, put tenants in it. In some cases, sell the property as a business opportunity to investors. In many cases, I kept the properties for myself. But then one day, somebody asked me, Joel, how much do you charge the electric company to rent your house? I say, what do you mean? And I say, how much the electric company paying you to use your house? And say, when the property was vacant, the electric company, the cable company, no other companies made money on these properties. All what these companies did, they just waited for me to invest my time, my money. When everything was ready, they came and they started making money. And this asked me, do you charge your tenants rent? I say, absolutely. I say, so why don't you charge the cable company rent? And I say, I never knew that they can do that. And this gentleman actually showed me how to do it today. This is what I teach people all over the world. Everybody that touching your house, it's your home. The only reason that they're making money is because you invested time into it. Every time when you're selling a house, if you're a real estate agent, the only reason that this company is making money is because you put your time and the effort to do it. These companies, like my tenant, they should pay me, and they've been paying me for years, probably over 3.5 years. Think about it, the cable company paying me to use my house. And so this is what I'm doing. If this is something that have any interest to you, I would love to continue this conversation. I can probably stay here for another 3 minutes. And if anybody wants to take my number, it's next to my name. Just send me a text message. I will show you how the cable company will pay you to use your house. And with that, thank you very much, Bill, for letting me share.
Yeah, thank you for that story.
Thanks.
Thank you.
I asked Joel to come on here. He's being very, very modest. He was a master flipper, and he's now built this network based on a way to generate residual. I think residual income and lead generation. I think the missing piece in your network is not using it for lead generation for real estate agents or investors. And so it's a way that you can generate revenue from ancillary services while you're selling a house or while you're talking to prospects about buying or selling properties. So definitely, if you're interested, reach out to Joel. I'll tell you this. I met with him. I thought it was amazing. I learned a lot about real estate investing. I bought his book. I read his book. I joined his network. I've already made money. And I got to tell you something. I'm really busy with my real estate business. I'm in his network and already getting residual income as profit over what it cost me to get started. He's phenomenal. A lot of fun to play with. So thanks for being on. And if you're interested, Joel's information's in the chat box.
Thank you. Appreciate you.
Thank
Sure.
you, Joel.
Yeah. Okay. So Tim's contact info is in the chat box. Melissa is fantastic. Melissa Uloa, property management in the South Bay, and she has her information in the chat box. Any other questions I can help you guys with? We've got just a few minutes left here. You got Tim Sachs here. This is a guy who is generating real business for real investors. And if you have questions on the property and project and financing, can help solve some of those issues. Anybody have any questions? Hey, Christopher DeSalle, I see you on the call. Nice to see you as well. He's another guy I met on this call. When people ask me, why do I do this call? I don't sell coaching. I do sell houses. So if you need to sell a house in LA, I'd love to talk to you about it, and anywhere in California. I'm building a real estate team. If you're a real estate agent, want to talk about building a business, love to help you. I just call because I like communicating with people and meeting experts like Tim and getting their attention, getting their time. But Joel's one who I've made money with, and Christopher's another one who brought a great investment package to this program. In fact, I think Christopher and Tim, you guys should meet, because I think you guys kind of cover some of the same world as well. Chris raises funds for multifamily projects, and Tim lends on multifamily projects as well as has investors. And I've literally wrote a check into Chris's program, and I got the K1, which made me very happy. So glad to participate with him.
The one thing too, Bill, like I've learned so much. I know my genre pretty well, right? But I've learned since the start of the pandemic so many different things on this call that has just been tremendous. Things that I never thought I'd ever learn. Thanks. And it's from your guests and your knowledge and stuff like that. I'm like a sieve. So, and I was accidentally joined this call by an accident 2 years ago, and it's just been great, Bill. So I got to thank you from the bottom of my heart, because I've learned so much from you and your guests, and I can't really thank you enough, because it's funny, you read books and websites and, listen to those podcasts, but real world, Bill, real world, that's what you got, and your guests. So I can't thank you enough.
Yeah. Look, I mean, for the rest of you on the call, I don't know you, but I made money investing with Christopher. I made money with Joel. I had him as a guest here a few months ago. I'm hoping to do some business with Tim. I mean, I think he's legit. And Melissa, we did business together, made some money together. So this is about, the goal here is to generate business together, share opportunities. I don't need a piece of this. I don't get anything from Tim. If you call him, he finances the deal. Maybe he'll send me a thank you card or a cup of coffee, but I'm not invested with him. I think he's a real asset, particularly for people looking to fix and flips and value adds and such in the area. And I would encourage you to work with him. So, but Chris, thank you for jumping in. I appreciate that.
Thank you.
Okay. Thank you. Any other questions, challenges, or any quick pitches we can help you guys with real quick? We have just a couple minutes to wrap up. Nick Case looking for opportunities. Nick is always looking for opportunities. He's also a local real estate broker. Thanks, Nick, for jumping in today. Who else has something that they want to pitch, or has a property or something under contract or a problem on a property? You guys should all everybody should have something to pitch. I'll pitch something just real quick. I'm hosting a live event just because I can. A week from Friday for real estate agents only. It's in Diamond Bar, where I used to run a large real estate company. Thriving in real estate during this transition, and we have a great guest speaker. Carlos Gutierrez did over 60 transactions, about 70-something million. Luxury property listing agent in San Diego along the beach. So if you know Carlos, he's one of the top agents of the Mike Ferry system. And if you're interested, text me, email me. My guess is you probably got an invite from me if you're a real estate agent already. It's for real estate agents only, or aspiring real estate agents only. So text or email me or call me if you're interested in joining for that. It's in Diamond Bar a week from Friday, 9 to 12, and free continental breakfast, or free something for breakfast. Anything else? Any other questions, challenges?
Bill, I have a question.
Go ahead.
I'd really like to know what people are seeing out there. What deals are available? What do you see? Do you see on market opportunities, off market, pocket listings? Are there deals with meat on them? Right. So are there profit potential with potential flips? Are there rentals available? What do you guys see out there?
I'll chime in on that because I've been searching for the deals. I've noticed that a lot of the deals that come to my table, and they all say that they're off market potential, with an exception to a few, is that, it's just not, if you're looking for a rental, it's not yielding the return in LA for the pricing. That's one. If you do have one that looks like there's potential, there's always this like fine print that it's in rent control and you can kick out the tenants and get additional income for it, which is not necessarily true. So that's what I've been seeing a little bit of. Anything that's really special, it's already under contract before you can really even get in front of any of the right people. So, I mean, that's kind of like a little gist aside from like going and door knocking yourself, and if you get the right life story, you might get a potential to get in front of the right people. But I know that this year I vowed to try to get my first deal. And I've seen a couple of different things, throughout LA. And I don't know if it's just LA in general that's kind of a little bit of a market that is just a little out of control at this point. But that's where I'm seeing it. I know there's deals to be made. It's just, you have to know the right people, kind of like the movie industry, right? If you got the right door, they'll let you in.
Yeah. Yeah.
Yeah.
Interesting.
I would parrot that. I think the way I would describe it is just a little bit different. I would say that I think, like all businesses, real estate has gotten more competitive. And what I'd say is harder to get listings still, but still when you get them in price right, they sell. So it's more work to get it, a little less. It's a little more to sell now. The market's cooling just a little bit. It's not as frenzied as it was. It's still crazy hot. I saw a property today in probate court where buyer had the property at $900,000. We were going to overbid at $945,500. And my investor came in and got in a contest with another investor. We ended up buying it at $1.255 million. So and how would you find the deal? It requires a lot more work, a lot more research. You got to look at more properties. But you find a deal, there's money in it. I think that's the thing that drives everybody to do it. But I think it's way more competitive than it was a year or two ago. And if you're willing to work harder and smarter, this is the market of your lifetime. If you're not, that's what goes.
Phil, I have a question for you on the probate deals. So I've done refinance on probate, but when it's an acquisition, is it possible to get into get an appraisal before you are able to purchase the property or close on it?
Well, some yes, some no. Depends on, every property is a little different, right? So some properties I would say are fully marketed, some are partially marketed, and some are impossible to market. But if you can get in, that's where the money is, right? So when you say an appraisal, if you do an LAProbate loan, it's through some sort of a process where the lender puts in the computer and then some appraiser calls and wants to have an appointment with the listing agent. If the listing agent isn't cooperating, you can't get in. But on a hard money lender or a bridge loan lender, you might call me and say, look, I can get you in. I met the tenant, he'll let me in. And you walk in, you can get the property. So sometimes it requires a little finesse. But that's how I get paid, is the finesse. The property today, it was being marketed as though you're buying the property and all three have tenants and are paying rent. I happen to know only 2 of the 3 units were occupied. One was vacant. And both those 2 are beneficiaries of the probate, meaning they're going to get money from the probate, which means a couple of things. One, they have money, so they can afford to move out. Number 2, if they don't move out, you can sue them and they have money. So the only reason we don't sue tenants normally in eviction court is they're usually deadbeats, don't have any cash. But these are people getting $500,000 each. So the eviction attorney is drooling at the prospect of going after them for squatting in a property. So I would say, to answer your question, they're all different. Probate is, I think if you ask me really how to define it, it's just a different puzzle every time. That's why I like it. It is more work. It requires some research and dig a little deeper.
Mm-hmm.
But yeah, you can sometimes not. Sometimes I've had guys do just drive-bys. Of course, condos are great for hard money lenders because you have other, you already have a floor plan, you have photos, you have, you know the basics of the project. So I did a lipstick flip with a hard money lender, and we couldn't get in the property, but he was able to do an appraisal based on a drive-by, and then he saw the other units and kind of knew what the plans were. Everyone's a little different, I think.
Got it. Can I share some observations with the rental market? So what we've seen is a rapid increase in rates for rentals. So just so everybody understands, we're not setting the rates for the 30-year loans. We're just providing access to the wholesale market for rental 30-year loans. And so it's really a value-added service that we're providing. We don't set the rates, but what we've seen is the rates have jumped up. And to qualify for the loan, you have to have, you typically, if it's a 70% LTV or higher, you have to have a DSCR, debt service coverage ratio, that's greater than 1. And basically that means that you're earning at least $1 for every dollar that you're spending. And so the hardest part is on the appraisal on the 1007. We're seeing it, we're having a difficult time to get the appraisal to justify the rents. And because it seems like the market the rental market is lagging the actual real market. And so the comps, the rental comps lag the real market. And so a solution to that, so that's the problem. The solution is really where bridge comes in. And so if someone wanted to do a 24-month bridge, it might make sense to do the bridge and wait until the rates stabilize a little bit so you can lock up the property. And so that's kind of a case for a bridge right now. And there is an added cost, but it does pay for itself because you can lock up that property. And so that's kind of a situation. If you do come across a rental property that can justify high rents and create a DSCR that's greater than 1, then by all means go for the rental loan. But if you struggle there, then you might consider a bridge.
I think there's huge pent-up demand on the rents, but you have the rent control that limits that. And there are people who've kind of figured out how to unlock that with value added and various other methods. And for every unit you can replace from a pre to a post, you're talking about adding hundreds of thousands of dollars of value to the property. I'm shocked at the rents that properties can get, and particularly West Side Los Angeles today. Just shocking the real income that people are paying. But there's no alternatives. If you have a good job, you're working at Google or Apple, and you're being relocated here, what's $3,000 or $4,000 a month for a rental? That wasn't the case. $5,000 a month, $6,000 a month. That wasn't the case. It's just jumped up like everything, kind of like the price of gas. The new rents, I think, are reflecting the market inflation, but so many of the units are locked in at lower rates. And so to investors who can find a way to unlock that, there's tremendous opportunity.
Mm-hmm.
Like I said, the property I just bought, I think if you bought the property with tenants and older rents, no, but Echo Park, you can replace those three units, Echo Park, probably $3,000 or $4,000 a month each. All of a sudden, that 1.25 looks like a really good deal. Okay, hey, we ran out of time here on the hour. I didn't know how long it was. Hey, Tim, thank you so much for being with us today. Tim's with Angelus Capital, and I put information in the chat box, but just to make it simple for you, the email is info@angeluscapital.com. That's ANGULUS capital.com. And there's a phone number at the bottom if you go to the website, 949-415-4186. They do bridge loans, they do fix and flip loans. That's really their bread and butter stuff. And I think one thing that I liked about it was he's able to help newer agents run deals, run numbers, he or his team, to see if it makes sense for you. So Tim, thank you so much for being on our call today. I really appreciate it.
Yeah, thank you, Bill. And thank you everyone for your informative questions, your good questions, and your time listening. I really appreciate it.
Thanks. And for everybody else, we do this every Tuesday at 3 p.m. Pacific, 6 p.m. Eastern. It's realestateinvestingzoom.com. We live stream it on YouTube and Facebook and LinkedIn as well. If you're on there and you see some comments or questions, ask them. I'll do my best to either answer them or get them to Tim.